Hello everyone, our video is talk about Bank Negara Malaysia. This video is only for education purpose. First is Bank Negara history and background. Bank Negara established on 26 January 1959 as Bank Negara Tanah Melayu. The main purpose established was issue currency, act as banker and advisor to the government of Malaysia and regulate the country's financial institution, create system and monetary policy. Not only that, the Bank Negara Malaysia is the power of the bank. The bank is endowed with certain power through establishment of legal act by the Parliament of Malaysia to help fulfill its objective. New legislation are created and current legislation is amended to reflect the needs of the time and the future. Bank Negara is born in 18th century. Malaysia became the subject to the British Empire. They were part of the Strait Settlement, while in the British East India Company controlled the territory mainly in South Asia. In 1837, the Indian rupee was made the sole officially currency in the Strait Settlement, but in 1867, silver dollars were again legal tender. In the late 1918, Bank Negara under Governor Jafar Hussain was a major player in the forex market. Second is the main content. Inside the main content has 5 points. The first is brief monetary policy in Bank Negara Malaysia. The global economy has strengthened further with growth becoming more entrant and synchronized across the region. Global trend continues to sustain strong growth performance. In the advanced economies, diminishing labor market strength and addition policy support will provide further impetus to growth. In Asia, growth is driven by sustained domestic activity and strong external demand. Globally, financial market has remained stable. Global growth is projected to experience a faster expansion in 2080. In this environment, risks to the global growth outlook are more balanced, pointing toward continuity in the current pace of global economic expansion. At the Monetary Committee meeting today, Bank Negara Malaysia decided to increase the overnight policy rate by 25 basis points to 3.25%. The floor and ceiling rate of the corridor for the OPR are correspondingly raised to 3% and 3.5% respectively. Second is function of interest rate in monetary policy. Interest rates serve as a vehicle for financial intermediation in the economy. It influences saving and investment decisions of economic agents. It also guides the flow and file for server to borrowers. The interest rate is the price of money. We can choose to store our savings in the form of cash or in a current account. The price we pay is the return others alternative would have provided. The interest rate is also used as an instrument in economic policy, setting the interest rate to achieve a monetary policy objective. Often price stability or low and stable inflation is usually the responsibility of the central. The third one is the relationship between interest rate with strength of currency. The interest in our country increase, then the currency value of the country also will increase. And if the interest rate decrease, then the opposite effect of depreciating current value will take place. So the center of bank, our country, may increase interest rate in order to defend the local currency by causing it to appreciate in value in respect to foreign currencies. In order for the change in domestic interest rate to affect the value of domestic currency, we have to assume that the economy is open, has a floating exchange rate and the investments are relatively risk-free. An open economy allows purchase of goods and transfer of funds to take place between different countries. A closed economy, on the other hand, restrains foreign investment and international trade.
The fourth one is the relationship between interest rate with price level. If the interest rates are lower, more people will be able to borrow more money from banks. The result is that consumers have more money to spend, causing the economy to grow. The opposite holds true for rising interest rates. As interest rates are increased, consumers tend to save as return from savings are higher, with less disposable income being spent as a result of the increase in the interest rate. The economy slows and inflation decreases. The interest rate acts as a price for holding on loaning money. Banks pay an interest rate on saving in order to attract depositors. Banks also receive an interest rate for money that is loaned from their deposits. When interest rates are low, individuals and businesses tend to demand more loans. Each bank loans increase the money supply in a fractional reserve banking system. According to the quantity theory of money, a growing money supply causes inflation. Thus, a low interest rate tends to cause inflation. High interest rate will cause deflation. The fifth one is the impact of interest rate adjustment towards Malaysia's economic performance. Interest expenses on holding inventory could have a significant impact on farm profitability and associated agri-businesses. If the inventory has been sold, the cost of holding inventory is the interest paid if the business has debt or the interest that would have been collected, usually called opportunity cost. In the market economy, interest rate is an important economic lever, which is first reflected in the influence of capital supply and demand. The change of interest rate level has an important influence on the transfer behavior of the surplus person, which places decisive role in the opportunity cost of the fund surplus. When interest rate is rising, it means that the cost of borrowing is increasing, and the burden of the cash trap is heavier, and their borrowing needs are constrained. When serious deficits occur, short-term interest rate can be raised to attract foreign short-term capital inflows, reducing or eliminating deficits. When an excessive surplus occurs, the current level of the country can be lowered to limit inflow of foreign capital and reduce or eliminate the surplus. The last one is the summary of Bank Negara Malaysia. After we done this assignment, we learned about Bank Negara Malaysia history and background. We learned the brief monetary policy in BNM. We also learned about function of interest rate in monetary policy, the relationship between interest rate with strength of currency and price level, also important in our country. Lastly, we also learned the impact of interest rate adjustment towards Malaysia's economic.
Thank you for watching our video.